Welcome back to Trading 360. It's time for the 360 round. Of course, we've been watching crude oil. It's up more than 10% this month. We have tensions in the Middle East, and those have been escalating. What is the impact on the energy sector? What do we need to know and follow here? Patrick de Haan, head of petroleum analysis at Gas Buddy, and also Nitin Kumar, senior equity research analyst at Mizuho. Thank you both for being with us. So over at Mizuho, I'll start with you, Nitin Kumar. You have actually some calls on some of the names. Tell me about what seems to be working in the world of energy. Which ones may be buys and why?
Thanks, Nicole, for having us this morning. Look, for us right now, it's still a defensive world. While we are watching the geopolitical tensions emerging in the Middle East carefully, the call at the start of the year was that there is plenty of excess spare capacity. You had some comments from Saudi Arabia overnight talking a little bit about how they don't feel that it's their responsibility alone to balance international markets. And so at this point, we are still not looking for a big spike up in oil prices. But of course, we don't know what the end goal will be here. In that environment, we prefer stocks that are defensive, that can create their own catalysts, either through the asset base or through the balance sheet. So our top picks are Chevron, Coterra, and Civitas. Three names that we think offer investors a differentiated opportunity without having to rely on oil prices going up in the short term.
Yeah, and I mean, Chevron people are familiar with, Coterra and Civitas. Just maybe a word on each of those so we can get them out to folks and they can watch them while we're all discussing our discussions here.
Yeah, well, Coterra ticker is CTRA, and I think this is a very interesting story. This came about with the merger of Cabot, which was a Northeast Pennsylvania gas producer, and Cimarex, which was a Permian company, which, of course, people are familiar with the Permian. What this company has created over the last, I want to say, 18 to 24 months is a good, very flexible capital allocation strategy where they can take advantage of whichever commodity is stronger over the next 12 to 18 months. Critically, they're also, very low balance sheet risk. I think they're like 0.3 times net debt to EBITDA. Differentiated cash returns, 50% of free cash flow every quarter is going back to shareholders as a buyback. So in our opinion, this is a company that can navigate choppy waters over the next 12 to 18 months very successfully. Yeah. Civitas is a very interesting name, and I'll spend half a minute here very quickly. Old DJ company, had a lot of risk in Colorado. Last year, they go ahead and buy assets in the Permian, have really differentiated themselves. Balance sheet's a little bit more stretched, but only 1 times net debt to EBITDA, nothing heroic. Strong cash returns over this period of time. We like the management team. So overall, we think this is another differentiated opportunity for energy investors.
Yeah, thank you for those. Patrick de Haan, I know you're there with Gas Buddy. You have a report that came out today about gasoline prices following what's been going on. I mean, you've had Red Sea tensions. We've had tensions in the Middle East. We had cold weather. You also noted GDP. Tell me what you're watching and where some dollars and cents of this for the folks.
Well, Nicole, this is the time of year when we generally see sluggish fundamentals, a weaker American consumer. Obviously, in the last couple of weeks, we've seen extremely cold weather, which has derailed both oil production in the short term, especially from areas like North Dakota and down to West Texas. And we've also seen the impact hitting refineries as well. U.S. domestic oil production took a 1-week plummet last week by 1 million barrels a day. U.S. refining capacity fell by over 7%, or at least inputs plummeted last week. And that's pushed gasoline prices up here over the last week. Not to a significant degree yet, but consumers are getting ready for the sticker shock. We tend to see gas prices start their rally in mid to late February as seasonal factors generally start pushing prices up. Hopeful that it won't be quite as painful in the spring and summer for gasoline prices, but we will likely see the national average starting to move up here in the weeks ahead.
So what would the national average of where it is now, Patrick, and where it could be this summer?
Well, Nicole, we stand at the national average today about 308 a gallon. We expect that that could advance by 35 to 80 cents a gallon. Keep in mind, too, as we mentioned, the Houthi attacks in the Red Sea and what's going on in the Middle East, those remain wild cards that could either enhance the increase or potentially push it down in some ways if there's a much different situation that plays out. I think that the biggest of increases
Okay.
is really going to be in the March to April timeframe, but we still could briefly see the national average hitting that $4 a gallon mark this year.
All right. And last but not least, Nitin, Kumar, I mean, just where oil could be headed. I know you didn't see it surging at this point, no spike, but is 90 or $100 out of the question, or it's still a possibility?
Oh, I definitely think it's a possibility, right? We're at the very early stages of, I guess, some escalation in the Middle East. We all saw the headlines over the weekend. I think for a spike, there is no question that 90 or 100 is in the range. Earlier this year, our range for the year was 70 to 90, and we really, there's no upside when you have something like what's going on in the Middle East right now. But I don't think that's sustainable, and the reason for that is that there is spare capacity within OPEC. You have excess growth in the U.S. and non-OPEC, so we could see 90 to 100, but I think the average is closer to 75 to 80.
Thank you both so much. Wonderful to see you both. Thank you. Good luck here at Oil and Gasoline. Patrick Haan of Gas Buddy and Nitin Kumar of Mizuho. Thank you both.